wanted to jump on here. Hopefully everything is on here. So just starting off this video real fast. It's about 12:35 Friday, and we just came up here, and I'm working on the HPS watch list for next week. And I want to always do some extra videos out there. I haven't taken any trades. I've been in and out in the last couple of days. I've been real crazy because of family, priorities and stuff. So I will be back on track probably by Monday, as everyone's going to be leaving. But that's not anybody's concern, and everything is still good. But when I see these patterns play out, and I saw the explosion in the market yesterday. I wasn't in the markets. I did see it go up. My puts got pushed up. I felt it, really. It was really a situation where it was the perfect storm for me to the downside. I had good puts in the market to protect myself against my longs. And then we had this tremendous, some news coming out of China. Really, actually, there were news out of China this morning. Yesterday, there were some other things that really started getting this market popping. And with the big pop, of course, the puts got crushed, I tell you. Yet my longs were the ones that were least performing. I had a lot of retail longs, and they continued to least perform. And you know what? Even though you had a good plan of a strategy, some of the other ones are going up to DGX and stuff. But I was upset that we didn't get that big enough bounce in the Macy's, which I still am calling an opportunity down here. But I want to jump on right now and talk about futures and making money consistently each and every day. And we look at high probability patterns. And one of the setups that I just wanted to go over with you live is the 1-2-3 pattern. The 1-2-3 pattern is when you establish three really good underlying pivot areas, or two actually, and then you have another one. And you could recognize that by a change of direction. So it's a clear pivot. From that point on, once you have two here, and you actually had two here, so it's, by the time we looked at this, we could really confirm that this was a really great trend line. And even when we came down here, I'm sure Paul was trading this area down here. But now that we had these three and we're moving back up, very easy to drag a line here. What I do is I just copy my line. That means it gives me a pure parallel trend line. I could just lay it right over. And I just drag it right up to the pivot area there, and that area comes down and it tells me where my recognizable channel is. And from that point on, it becomes just standard operating procedure. You got a triple stochastic setup, you have a recognizable channel, some other things here. You actually have a confirmed downtrend, and if you looked at each time that market has been pushing up here and getting overbought, we've been kind of pushing back down. Now it doesn't say it has to happen all the time, and these are trades that have to happen as you get into it. You always want to take that short into strength. So you kind of have to have faith in the move, and also understand that this pattern overall, I was just going to talk about this, as it continues to get longer down here, and just, this pattern typically breaks out to the upside. When we talk about downward channels, we typically see them resolve to the upside. Sometimes you'll break down to the bottom, but usually once you start to put in a double bottom in a channel, in this case we try to do that and we try to pop out, but we didn't. This won't, there's a shot that we can actually break out here and push a little bit higher. The market has been extremely strong. I'm already starting to smell the bears coming out saying, we're due for a pullback. This would be a perfect day. And I came in today thinking today would be a perfect day for a pullback myself. And then I'm putting two and two together. I'm saying everyone's expecting this to be a perfect day for a pullback. Probably a good shot that we push even higher, but just some thoughts. So I just wanted to get back here, and I actually threw the trade on there. I don't know if you did see that. All right, so here it is. So it's 62.50, and it's this is easy enough. This two pivots, three pivots, came back. It flagged out. There was actually a good trade here earlier in the day, and it was just based off this overbought level. I was looking at it as a flag setup, but sometimes we get a little extension on that flag, and then we rotated back down and broke down, got oversold, bounced, and continued its trend down. So we have to go with the trend today, even though the market has been extremely strong over the last 2 days, and I'm cautiously neutral, because if you're hearing the negativity and saying, all right, this is a perfect opportunity to go to kind of grab those shorts. Well, that kind of, like I said, leads us to believe that this market might not be done. It might be some people out there to feed on. These people who expect this market to kind of just roll over and says, oh, this is too much, too fast, or whatever. Maybe it is, maybe it's not, but there's all different areas to look at when you're trading. I mean, you can look at charts, you can look at fundamentals, but you can also look at market psychology and, psychology and rumors and, stuff like that. Now, normally, and this is another big thing, we talk about what happens if you get a fast rotation here. The fast rotation is pretty nice. This is embedded. You could take a tick off here, or maybe even, maybe even 2, 3, 4. All right, that's good, Your
profit target has been reached.
All right, so profit target has been hit. Easy enough.
Your profit target has been reached.
You have to be determined and really disciplined. I'm thinking of all the D words today, and there's a big difference between. There's another D word. The difference. Big difference between, seeing the setup and not acting on it, like the rotation here, not acting on it, and then kind of just like gambling. It could go push lower. The bigger trend is down. We have everyone's screaming, but this has got to be a rule that you have to say, what? If I'm going to try to be consistent in my my earnings and stuff, I have to be consistent in the way I enter and exit trades. There will be no rhyme or reason if I don't. So you have to have a rhyme or reason. You have to have a strategy. You have to have a proven strategy, and it's very easy. Take hold of setups that are setting up. Get out with define your stop beforehand. What is your strategy to call for? Well, we know, like on a triple stochastic reversal, we use that reversal bar. Same thing with a lane divergence. We use the top of the lane divergence. It's really, or the bottom of the lane divergence. In this case, as long as you have your thing, we're talking about maybe, paying attention to that first rotation. Is there a profit to be taken here? We're on the 50. That's a sure thing right there. So you can add that to the win column, but if you hold on any longer trying to gain more, it could actually move up a little, can move down. You might make a great trade here. I think that's a great trade either way. Recognizing the spot where you're going to go buy, sell into or short into that strength as we break here. Really established. A lot of people might not even see this. And there's another thing. This could be considered a wedge pattern. So when you have that wedge pattern and a 1, 2, 3, this is a measured move off the wedge pattern. So it's great to even calculate that we're going to get that pop up there, and then actually calculate we're going to get the pull back. At this point right now, like I said, the ball's out of our zone. It's not in our strike zone. We could swing, but I don't think we're going to have the odds that we had before. All right, so as you can see, the market here is still churning and burning here, but we've broken out of this channel. And again, was going to show you some SPY setups coming up on how to take advantage of maybe a different strategy, a different vehicle, and if it's not the futures, maybe the ETF, the Spider ETF, SPY, or even the options. And you could go all the way down the line. The options in the SPY, I think, are the best. But you could also try some of the pro short shares, the SSOs, the UPROs, the SPXS. These are bull and bear ETFs that track the S&P index, and they'll give you different returns. So Weight Watchers here out with a little news here, breaking through 16. Apparently, Oprah lost 15 pounds. I said that's good for 15 points. And Weight Watchers here pushing up here a little. It's a little bit better. I ended up getting in that a couple days ago. A second time. We traded it once overnight, got out in a nice gap up, got back in on the pullback. It's been chopping around 16. Now it's back above 16. So that's and again, Macy's and retail getting hit today. And I didn't dig deep into it, but I figure it has something to do from Amazon's tremendous quarter, and how there was other things out there. I think VFC or VCF, another apparel company. I forget what that one is. I never trade that one, but it's a pretty big one. That also got crushed today, so it might be some bleed over. But like in the Macy's for next week, believe it or not, and I was hoping to see something a little bit better. Wynn Resort's pushing back up, but I don't want to get into this. This is not what I plan to do. I wanted to get my research done, but we're looking at I wanted to show you this 1, 2, 3 pattern before, and that was the main gist of this video. And even though it came back as it should have, these are short-term 1-minute charts. The same thing is going to apply in the 5-minute chart. I mean, we could adjust the time frame here, and then kind of zoom out here and kind of look at this. Maybe some of the different indicators. I like the 1 minute personally. It's just so smooth. But what can we derive from this? Well, seems to be a little embedded here. These are starting to rotate up. We have a trend line break. Well, it's not. It gives you a different look at it. I like looking at the cash personally. Let's just look at the cash chart, and the cash chart's a little bit different. We're all right. So here's the S&P cash, and it's a clean look for me. I like the way this. I could read everything pretty clear here. There's a lot of other crap happening in the futures, but you can see we're embedded here on the 5-minute. Things are probably in sync now between the cash and the futures on the stochastics. So we should see things kind of work out together. Meaning a divergence shows up here will show up in the futures and vice versa. So, are we going to roll over here? There's an argument here that we could see some selling at the end of the day. But again, it's a tough call to make because I think a lot of people are expecting that. And I don't want to, never want to be caught on that side expecting something too much in this market. So go back here to the futures, and you can see it is starting to get really tired and choppy, and not much going on right now in the 1 minute. Facebook here pushing a little bit. Hey, Johnny, stop talking about other stocks. Stop talking about other stocks. So that's up 31. All right, let's take a look here. So, you know what? A little move from here to here. I picked up some. Tell you the truth, I went to go pick up something, and I ended up pushing the wrong button. I ended up getting into October 23, 207 calls, and which are expiring today. 207 SPY calls, and they're up slightly. They're up $16, but it wasn't really my original intent. I was looking for maybe a follow-through failure here, but it seems to be holding up. So I'm going to manage this trade here. I'm going to try to manage this out. Oh, nice little pop there. That's going to be good for me. That's just happened to be at the right time, right place here. $50 up on that. So we were talking about. All right, so we got a little move up here. Like I said, I have these SPY 23. I wanted to give you an example of what we got this for. So I ended up picking these up. What did I pick this? Average for 26 cents a contract. All right, 26. Kind of, and it was just kind of a weird setup. I'm not going to go into detail on what happened here on this the whole thing. I was putting an order in, something else came up. I pushed it by mistake, but I wanted to just kind of show you the potential if you want to get in and out of these things. But you have to be, you have to understand that everything requires discipline. It's easy to get in, it's harder to get out. And I think you have to just step up to the plate sometimes and just push that button. You just got to push that button. See if I can sneak out of 44. See, it drops it so fast. Your profits disappear pretty fast if you don't. There we go. It's probably going higher. So I just sold it for $50. But basically that one, it wasn't a great example on that. It was not a great example on that. I shouldn't even. I'm not even gonna count it. I'm not counting anything. I'll take the $50 though. I'm not giving it back. Maybe we could do it the other way now. I could do it right. All right, so just joining the market back here. We just had a recent spike up here, so this sets us up for what we call. Lots of times we'll see lane divergences like this, where we get a move up, slight rotation back, and then a follow-through spike up here, and that'll give us a divergence because this is pulled back a little, or at least a double top. You can see this is pulled back a little. If we push back up here, kind of fail, pull back down, without getting out back up above that 80 line, and we take out the highs here, we could have ourselves a divergence. This is much easier when you're not on the mic to concentrate on each setup and kind of track it. Know what you're stalking. Know what you're looking for. Look for the situations that this happens in a lot. This looks very strong right now. Very strong. This looks, we're embedded on the slow, medium in the middle one, slow in the bottom. The rotation wasn't even that severe. But again, we won't take it unless we see the divergence. It's not like if we take out the highs, we're going to jump in it. I want to see that divergence. It might not happen. But it's a good reason. It's good to look at them, plan them out, and that's the only reason you should get in them. If your plan is a good plan and it hits your, looks like you're and it starts moving back down, it's not in our strike zone, but it doesn't mean that, we're looking for something in the strike zone. The strike zone is that perfect setup, the higher price level, the rollover and stochastics. If there's some other setups there, maybe we'll take a look at them. Well, you know what? If you're listening to this as a podcast, then I'm very happy about that. Please give me some feedback because I want to start putting out some podcasts. And basically, might be during the market hours, might be after market, talking trading related topics and having some good times and stuff. And even though I'm doing my watch list, I'm all over the place today with this video. And I want to turn it into a podcast so you might actually hear some of it because, you might not see the chart. If you don't see the chart, then you have to go to the site. You have to be a member, and you get the chart that goes along with it. But the podcast actually will go out, and it'll be interesting to see if people start picking up on it and stuff. Because right now you can actually see that for those out there looking at this chart here, we're starting to, possibly, get that to that divergence area. Yet we are possibly setting up as a flag. You can see the slow, medium stochastics here kind of embedded here, and our fast stochastics here chopping around on the way lower, but not doesn't feel like there's any conviction behind it. It seems like maybe there's a better flag here. Don't want to read into it too much, and that was the next topic I wanted to get into. Is just sometimes being able to get up. I think what's great about day trading radio is that you can put it on your you can put it on your home stereo or on your phone in your car and stuff, and you don't have to be constantly like I'm doing watching every single candle form in and out. I mean, it's crazy sometimes, and it'll drive you crazy. It drives me crazy. But what's great is once we establish this, if you're out by the pool, which I would rather be, hey, and just have day trading radio on, playing you some music, and then say, hey, there's a great divergence setting up here. You get up, you put down your drink, you walk inside, place your trade. Hey, this is not bad. This is not bad. That was the overall goal, to be able to identify these trading levels. But I know as you probably know out there how hard it is to step away from the market when the market's open. But you got to do that sometimes. Like days like this, Friday, I'm watching this candle form and nothing's going on. You want to take that gamble. It's like AC-deucey. You just want to take a shot. Is it going to break higher or going to break lower? There's no real signal here, but yet we have to sit here in front of the market and take a look at this stuff. Feel free to get up and keep the show on, and just relax and enjoy your family, enjoy whatever you're doing. Don't get too carried away with this. When the setups come, you're going to hear about them. A little cricket, and you know what? What's great? Is having the oh my God, my wife is just texting me. She said add 6 more people to the reservation. Oh my God. So we're going to do this Halloween thing tomorrow, the Halloween parade here in Nyack, and apparently there's going to be like 18 people going. 18 people. It's just a disaster. But yep, that's what we're going to have. All right, fast forward 5 minutes now, and you can see that we did take out those highs, but we didn't set up as a divergence setup, which we want to see confirmed. There was really no divergence on that, which is fine. We were waiting for that. We did have a triple. We did have a triple thread here, but there was no reversal candle either. It's one of those situations where you don't get the divergence, you don't get the triple threat, you don't get the reversal candle, but you got the ebb and flow. You do get that rotation back down, and maybe this one moves a little higher. Lots of times when we establish that good little channel, we typically will see a divergence top it out. So there's still a chance of that pushing back up here one more time. Try to keep personal opinions out of this. I do think that we have a better shot of dropping back down here. All right, here's another situation when we have that textbook flags up. So let's put this one on. This is a dangerous one. I wouldn't take this one yet, but we will talk about the potential flag setup here. The flag setup is that pullback and the continuation. It's a continuation pullback. The trend is identified. You have a slight pullback. You get a fast rotation there. And then the next thing you know, these two are staying really embedded up here. The slow, medium stochastic staying embedded. And right when you get tagged down there and you see that, you really have to buy into that weakness. As you can see, we start to get a small little bounce. Question is, how good's your entry? And how good's your entry? That's basically it. And how dedicated are you on your exit? You hear the ocean behind me? I'm down in the hurricane here, broadcasting live. All right. How much do we think that? Let's take a look here on the. We'll take another trade here on the options. Let's take a look at the SPX here again. Daily here, and again, just kind of a touch base on our market radar. We look for a move up to that 2040 to 26. We got through that 26 to 2070, but definitely seeing some interesting levels up here. We had that retracement trend line, top part of that trend line. We blew through this, no doubt about it. We're embedded, continue to be embedded on the daily. The hourly is embedded. The 5-minute is kind of embedded too. I mean, that's the ultimate musical chairs right now. When the music stops, that's when it's going to drop. Timing on that is going to be tough, but that's what we're doing. We're looking at flag setups, continuation moves, maybe a wedge pattern here or there, triple threats. measuring it all out. Right now it's measured out as a flag, starting to move out. Well, we have to say that is a perfect textbook example of the flag, triple threat, or the triple stochastic flag technique. And again, you gotta love it, right? You gotta love that. Everything based on that 1 minute time frame. And as this Friday wraps up and this podcast goes out, I hope you're enjoying it. I still have my watch list to complete and finish, but this is always part of the benefits here, sending out something a little bit different. Let's just watch where we are here. Let's zoom out a bit. See the 9:30 move up here at the 10 o'clock highs. It's not that far. You know what? You're not that far off of recent highs. Definitely off the highs of the overnight session, but we're not that far off of the highs of the session. Not far at all. It's actually looking pretty strong now. Again, that's we have to be very cautious on the on shorting a strong market like that. Netflix here popping. Here now. Again, like I said, if you're just listening to this, I've been watching Macy's over the last few days. It's been getting crushed with a lot of retail stocks, and just looking at it, the chart right now, we recently broke down out of a consolidation and took out the lows. But we started to see that divergence here play out, but then we had that little snapback, and we just broke down here again. But we're still setting ourselves up as a divergence, and this is probably one of the more difficult ways of getting into a trade, because you haven't confirmed a divergence yet. But if you see these play out over and over again, you typically want to buy that type of spike lower, and you're going to look for this to grind back up. Now, it hasn't happened yet. It might not happen. I think it's a higher risk setup here. But I also feel pretty good about, whenever you wade in here. We're actually seeing a little move right now off the lows. And you know what I think about? I think about Amazon. I'm a big fan of the Amazon. But I don't think people buy clothes through Amazon as much as they like to go and check them out and see how they fit, see how they look, how they feel. It's hard to buy clothes, I believe, online. Especially, it just seems that that's always going to be an issue there. So you take a look at stocks that maybe focus on that, like the Macy's of the world, maybe even the Kohl's, clothing stores, even the Gap, GPS. But all of them got hit today. All of them broke down. I mean, I think there was just news across the sector. They all have a very similar pattern playing out. They've taken out some of the lows, but they've all hold that relative stochastic setting here, which we haven't curled over. The gap here did not pull back to the lows yet. The Kohl's, that did break down, but we have the potential for that divergence to play out there again. This is a little dangerous because you're buying into this real weakness. It's not the best strategy, but it's a strategy that will pay off big. And even the Bed Bath & Beyond actually held up pretty good. It's actually pushing a little bit higher right now. But going forward into next week, Macy's, I want to see if this is going to play out. Maybe, take even a bigger position if it could prove itself and we start to see that divergence play out. Then I would be really excited for it. We thought we had the divergence earlier. We actually were trading up a little on it, and then it kind of just sank down here. So let's see if we actually hold that divergence going into next week, and how this is going to, how this overall is going to play up. Hopefully that's not a slip of the tongue there. Now, just another kind of a trick of the trade. We had that flag set up. You see that nice move out of the flag. We see the flag. It did break out. I consider that a very valid and really nice move here. I mean, it's not a lot, but it's about 2 points. You could probably get a point off of that. That's the type of setups we have here. These are what we're identifying. Lots of them start off and give you much bigger gains. But we start off looking at the small gains in our first profit projection based off some of the indicators. Now we have a underlying trend line here. And I just want to talk about what we normally see here. You don't usually see that cut right through, but a little bounce and then a failure. If we're going to see that, a little bounce, a little failure. If we're going to see that, we're starting to see a rotation here a little. This is still embedded. This got oversold quickly. We started getting a little bounce. The bigger flag here looks intact. Believe it or not, that's a really nice pivot area back here and another nice pivot. So it looks like a pretty much a textbook little flag here off of that lower trend line. You can see the market reacting to that. If we take a look at the SPX, again, we're not going to get much out of that. It's embedded. It's embedded, and it's so kind of hard to time right now. 1 minute chart. Interesting. Interesting thing on the chart right now I like to go look at. Take a look at all the big candles. Whenever even though we're dealing with a 1 minute chart, take a look at sometimes where a pivot area starts off. Here's an example back here of a pivot. A pivot is really a definable zone where the market here turns from going up to down or down to up. And when we start to see back and look back there, there's typically a pretty decent reversal candle. Now, if you're looking at a trade, you might want to pay attention to a candle like this to be your, confirming indicator, something that you might want to, it doesn't always work. Absolutely doesn't always work. But when you can look at different levels and you try to read into it, you have this trend. You can see candles. It really is hard sometimes to really pinpoint them, but you start to see them, especially if you look at those pivot areas that are already behind us in the rearview mirror. You can look back and see there is some decent candles, or at least looking at some of those better wicks that are left. I like those wicks. So here I wanted to point that one out. Didn't give us much of a downside on this one. This one, and that wick, really to be a good wick, I would consider it to be, at least 50% of the candle. And you prefer, to stick to those candlesticks that we consider reversal candles, being, the hammers, shooting stars, the engulfing patterns, the piercing patterns, bullish and bearish. These are just different. There's about 3-4 of them. Sometimes you can look at the outside day. I like those also. And you have to put, you have to really pick your spot. If you're not feeling comfortable, you feel the market here is, kind of bizarro because of the strength, and you still feel that strength is there. Then it's just as easy to step outside, measure it out, build your, watch how it plays out. This is still embedded here, and we have our last flag set up, which is good. This was pretty nice flag setup, even though we had 2 rotations, but we had a nice 1-2-3 channel, and we broke out of it. There's no divergence or anything, but everything is acting the way it should, And whenever we have that candle, that should be your planned stop too. Well, as I revisit here, and as you can see, another flag here developing, and everything seems to be just steady as she goes. A small grind back up, coming up on 2:30. I've been chopping up this little podcast for you. I'm going to probably come to a close here soon, and really start working on the watch list and those stocks that we're going to be focused on next week, which we've talked about a few of them today. Fastenal here pushing up nice now. Fastenal, FAST, pushing a little bit higher. That's the daily. Nice. I didn't realize we had such a nice pop yesterday. All right, here we go. Holding that 20-period moving average. We're embedded here. Slow stochastics, medium stochastics. Both of these are still holding strength. This is coming back, but turning back up here quickly. Not even getting a full rotation. We're starting to break out a little bit higher. Again, recent highs on the day are right above us, and that seems to be Just a good target right there. We also have an X marks the spot up around this 2872. X marks the spot again, an HPS type of setup where we combine different strategies. We have our resistance strategy. We have a recognizable channel that cross over these two lines here, cross at the same point, makes it that X. We'll also watch what happens here. We might actually see that divergence set up right above this level. Twitter here pushing back up here, a little volume, FSLR, and the market's looking okay all of a sudden. They never really looked bad. It's just about measuring out if we were going to get a severe pullback or not today. And we started off today, but we started to kind of reverse here between 11:30 and 12:30. We based out. We had this nice little downward channel, kind of a double bottom bounce up to a measured move, a little pullback. We had a nice pullback here, and then a chop session right here, but eventually got going. We had a couple flags, and a bigger flag, and a breakout. Now a small flag. Still looking okay. I think that's going to wrap it up for this just little experimental podcast, just talking about the markets, and hopefully you get the video. If you don't get the video, like I said, then you're missing out on some things. But I'm going to keep these going throughout the week, and I want to get working now on the HPS watch list. Now I have, like I said, I have one more day with my in-laws, so I'm heading back after the market today. I'm going to come back into the office over the weekend and finish up everything. So you're actually going to get your watch list on Sunday today. Normally I get it out on Friday nights, but we have, I have to take care of my relatives right now. So that'll definitely be out on early afternoon on Sunday, if not Saturday night. Market here popping back up. All right, so I apologize for that, but I appreciate the understanding. No big deal, right? I mean, it's going to get out. It's probably best that I, get through everything here. Fastenal pushing a little bit higher. All right, so tune in next time. And again, for those out there who are going to receive that video watch list, stay tuned for that coming on Sunday, mid-afternoon Sunday. Have a great weekend. Don't do anything I wouldn't do.